This is Justin Pulitzer. This is my weekend update for October 26th, 2014. I'm going to dive right into the charts and try and get through as much as I can. So we've had some pretty wild movements in the market of the last few weeks. And you can see we had this sort of slow decline, a false breakout, and then a resumption of a decline that got very, very steep. And you can see we've actually had a pretty big reversal back up, and we've gotten back through these failed double bottom lows, through the 20 MA, through the primary steep downtrend line, back through the 61.8 Fibonacci retracement, back through this sort of more dominant trend line that I've been talking about, and back through the 100 MA, and we're sitting just below the 50-day moving average. So this price action to me went from looking kind of bearish because we had taken out this breakout low. I had been discussing possibly a head and shoulders setup to really running a lot of stops, and now kind of having a pretty big retracement of the decline in a very, very short period of time. A lot of people on this day here had asked me if we had had a reversal on the technicals, and I had said no. There had been some news here. This was the Ebola fear day. It kind of got started that day with the doctor, and it had failed right basically at the 100 MA, and then kind of came back through this this trend line. But I had said that day I didn't think was really going to be the kind of the thing to short against. I know a lot of people took it. A lot of people took this day. They got stopped, and then they tried again. I didn't. The Nasdaq breath to this day was like almost 6-1, and I think it closed like 4 or 5-1. Still, even with this decline. So if that was going to be a key reversal day, I would have expected to see those breath numbers go red, and they never did, and they closed kind of strong. And then you could see Friday we took out those highs and we closed above the 100 MA, which is fairly bullish price action. This week, as we know, we have a Fed decision that Wednesday, and it's the 29th, and that's going to be the decision which will either end or extend QE. The market reaction on that day is going to be very, very important, and I don't mean just the knee-jerk if it's up or down. It has to have some follow-through. The high and low of that day are going to be the pivotal levels like they were on the last Fed day that I had discussed. I had said that this high and this low were going to be what makes or break the market, and we had basically an attempt to look above, which failed, and then once we took out that low, we never looked back. I mean, we had this big squeeze rally day that stopped to that low and then dumped. So I'm really going to be kind of playing things a little bit close to the vest until we see what happens that day. I will say, though, that this retracement is fairly optimistic considering the size of it. I mean, we're like 14.5 points off the lows in the SPY, which is huge. I don't have the benefit of seeing the Sunday futures. It's probably going to be a gap. It would not shock me to see if we do actually gap above the 50, if that winds up triggering a lot of stop losses and goes. For me, the important point here is going to be this last test of the 50. This was 197.60. Anything above there really starts to me getting a little bit more bullish. And then if we can really take out these old highs here, 199.06, I would say that the old high is in play. The key, if we gap down on Sunday, is to see if we hold the meat of this move. Let's say 195.26-ish here. This was where the body was. And then really to see if we can hold above this old 61.8, which was the 194s. If we do have some weakness early in the week, if this does wind up being a bit of a swing high and we do wind up coming back down to try to test, those double bottoms to me are still important. I know they gave here. We had that collapse I discussed here. They didn't really provide much resistance, but I think that they're still important in my mind, at least, to see if we can hold there if there's some kind of a retracement. I don't necessarily know that there will be. I don't know that there won't be. This market's been kind of wild. I'm just basically talking about the levels that I see as important here. I really, like I said, I think that Fed day is really going to be what sets the tone, and the subsequent days after that. So I'm kind of, like I said, more just waiting and watching to see how that resolves. We'll get to IWM in a minute. Qs have been more bullish, actually. If you take a look, we're not only through that downtrend line, we actually closed over the 50-day on Friday, which is pretty bullish, and we took back this entire dump. I mean, absolutely astounding. We took back this candle. The high here was 98.57, and we closed 98.62. So we're above that. This to me is pretty bullish price action. It's no surprise why that's happening. Apple is at a new 52-week, I know, all-time high, actually. I'll go through that in a little bit, but I do want to show you something that I do think is setting up for an absolute great short, which is, again, the relative weakness in IWM. You can see we're coming back up here. We were weaker on Friday. We didn't take out that high. We're nowhere near the 50. This, to me, would be an absolute great point to test short. It's a confluence of levels. I love that. And you have three here. You have the backside of this prior support line, the 61.8 Fibonacci of this decline, and a 50-day moving average. Anything in this area, to me, sets up as a great right or right out test short. And, if it's right, we'll roll over. If it's wrong, we'll cover with a small loss. But we had a great technical setup. If this does break higher, wait for the downtrend line. That will be the next point to try and short into. As you've seen, it's been in place for a while. I would think it would wind up being some type of a technical short. On a longer time frame, there's another 61.8 fib up here that would coincide well with that level if we get near there. So we're looking for one right here, and if that fails, then we'll be looking for one up here. Let's get into the Momo. I know that's what everyone likes. So Apple has reported earnings. They had been in a really nice channel here for a while. Moves above it and below it here, you can see we're not sustainable. And we have now broken over this downtrend line. We took out this last swing high. We did that with earnings on a gap, and we closed. We closed above it. You could see at 102.47. It was over the 102.38. And then I had said that any move over this 103.74 was going to be a breakout and move us into some range extension with 109 as my price target. So let me show you what's happening with that. There are some levels in between now and then that are noteworthy. You can see we did close with a bit of a doji at the high of a range, although I think this is really just a breakout. If Apple does have some type of rollover, this is going to be the key to see if it can hold over this 103.74. If we do extend higher and we come up, you can see the 1.272 Fibonacci extension comes in at 106.07, which coincides, you can see, roughly with this channel high. That's a good spot to take some profits. It's also possible for us to just kind of ride this channel up to the 161. This is actually labeled wrong. I often do this just because I'm typing too fast. Up into the 161.8 Fibonacci extension, which is 109.03. It's also possible we kind of just build out sideways as well and then make the rally higher. I mean, we could also even come back down and retest the low. I don't really know the channel low. I would think that really only happens if the market falls apart. Their earnings were really good. It was a blowout. The guidance was good, and Apple is trading at a new all-time high with a good quarter. I've been discussing all week on the stream that I think stocks that have had good quarters have that as buy the dip protection, and that's the ones that traders will use for certainty and safety. So I'm thinking Apple gets a bit higher. I do think we take a little bit of profits here on the 106s, but I think it's possible to get up to those 109s. Maybe we even finally do break out of this and kind of get that that blow off a bit in a type of move. The antithesis, I would say, or the opposite of what's been going on in Apple is Amazon, which had been in this kind of narrowing wedge, and we lost it. They kind of tried to rally it back up. They couldn't even get it there. And then the earnings were bad. I had said that really the right play in this was to buy it mid 200s or back up over if it has a breakout over the downtrend line. And it looks like the original one is going to come into play. This low, I want to show you where I think we can go. How low can you go, right? This low here, this key low here, we're through it a little bit. You can see we had gone through it, but we closed above it. This 184 here, low, coincided here with, 284.38. We kind of went through it a little bit, but we closed above it. So I think if Amazon can get back up over this high here, and I have an alert set of 293.81, we could see it do a bit of a gap fill because it has sold off ahead of the numbers and it has been kind of washed out. You can see on the stochastics. So it kind of is getting a little bit oversold. If we do wind up selling off more, if this low does give the 284, I'm thinking we can go fairly significantly lower. Let me show you what's going on I went to a 10-year weekly chart. If you go from the entire run from here to here, you can see the halfway back, the halfway point comes in the 220s. I don't necessarily know if we get that far. You could also see that coincides really well with this move. We had, this is from the breakout run. The 61.8 there comes in at 260. So I'm thinking somewhere in between this range, this 221 and this 259 is going to set up to be a bit of a buy. You can see we have an old reference high here at 246 and an important high here that after an earnings gap that kind of was a bit of a reversal inflection point around 238. So I'm thinking somewhere in this range. I'm just going to be waiting to see some type of a responsive, some type of a move where I see buyers step in, and then I'm going to kind of use it to sell some out of the money puts as a long proxy. I don't necessarily know that the Amazon story is over, but the chart is definitely looking bearish. I mean, you've got lower lows, lower highs. Now we're kind of making lower lows. I do think there'll be some type of a bounce. The stock tends to be strong in the fourth quarter, and I am looking to. I think it's a possible to set up short if we do break this 284 to play for a bit lower. But you can see on the weekly there's a lot of price congestion around here, and I think we're going to start coming into some price memory somewhere, I think, in this range. I know it's a bit of a wide range, and I wish I could be a little bit more specific, but there's really not that much here technically, other than these swaths. So I'm kind of thinking somewhere around this 260 is probably going to be somewhere between the 260 and the 246 is going to be. This range here is going to support, and it's a good spot to maybe sell some out of the money puts for very near dated for some type of a bounce. If we break this 284, maybe that's the target for the bounce back up to. So I'm looking early in the week for a short for below 284 if we do have some move lower, and then I'm going to kind of be looking to reverse and go long. The caveat to that though is if we do get back up over this 293.81, then we're going to play a little bit longer for a gap fill, just short term. Facebook has been really, really bullish. You can see let's get back into a daily chart. You can see since the earnings gap, we can use even a little bit more than that. 1 year? Well, whatever. I don't want to go back too far. It's not really relevant to this discussion now, but you can see we have a bit of a primary trend line. It's been challenged with some false breaks, but has held. We held it again here, and now we came back up and we made a new all-time high. I had been saying that anything back up over this 76.74 was bullish. It has been. I actually had said here to take some profits on this trade just because we were back at a 50-day moving average and also a downtrend line. And then I flipped pretty quickly back long again once we got back up over this high, and we've never looked back. I did say that I think we should take some profits around $80, which was just prudent. It was, a little bit over this past high. And my problem now with Facebook is we're coming into earnings, and we're coming in off of a very, very steep, quick price rise. I do think there's maybe a little bit more gas in the tank if we go to the 127. I'm sorry, 1.272 fib extension. That takes us up to 82.26. And then the 161.8 fib is up at 85.5. I do think that those price levels are possible. I would just like to see some sideways action or some backing and filling before going for this one. I do think that this one short term is very possible. It could even happen Monday if the market's bullish. But so let's look to take a little bit of profits and just trim and trail with that. If there is some type of a pullback, the important level still is this gap high. It also coincides with the 20 and 50-day moving average. I don't have obviously can't draw a fib on it because we don't have really a swing high to play against. If we do get up there, we'll start playing with the fibs. But this area should be some area of price memory, and then we know that this primary trend has held really well. So let's see what happens with Facebook on earnings. I would say that the risk reward though is a little less favorable now that we've rallied up more, and I would be looking to take a little bit of profits. I don't think you have to take it all off, but I definitely would not be going in with a full position after that kind of a run. Twitter has just been in chop mode. It's been working off some. I think this is really just people looking to see another earnings report. We saw the one that was good. I think they're kind of really looking to see two. That was really what was the turning point in Facebook once they had two really good quarters. I know their user engagement has been very strong lately, and there's been a lot of events, obviously, in the news. So we'll see what happens with Twitter. I do think that I keep saying it. Anything above 48 is bullish. Anything above 50 is more bullish, and anything above 52 is way more bullish. And then over the 53.64, I think we would challenge and probably make new highs. I've been discussing some targets in here at 57.25 and 58.98, which was the beginning of this gap from the initial gap down. Not really the beginning of the gap, but where we peaked out the last time. So those are just some price targets if we do have a move back up. I think if Twitter has some blowout numbers, or if the market perceives it as favorable, we probably will actually go and retest the old highs of Twitter, which are back much higher. But let's not get ahead of ourselves yet. I think the way to play Twitter is with short out of the money puts. The nearest strikes I would sell are 45s, and then probably after that is maybe 42s. If the earnings report is bad, we're going to have to see if this trend line in 100 MA holds. There's also now a 200 MA, which is rather uniquely new for Twitter. And you can see it's kind of held. We didn't quite get there. Here we bounced off of it. So that's also a really important level to hold in Twitter now, since we do have a 200-day moving average for the first time in quite some time. It took quite a while, obviously 200 days to get it, but now we have it, and we could use that as a reference. So I'm still fairly optimistic in Twitter. I will be looking to put on some earnings trades, and I'll be discussing that a little bit more on the stream as we get right into those numbers. One that has been really strong, it's not one I talk about lately, is Gilead. A lot of people on the stream like biotech. I'm not such a huge biotech fan, although if I was, Gilead is one of them that I would say is probably more of a buy the dip stock. It had been in this bit of a rising wedge, and it fell out of the wedge, and now it's back into the wedge, and you can see it's 1, 2, and 3 times here seems to be a charm. This is a key level to me. It needs to hold over this 101.64. If it does, there's some room in the wedge to the 1.272 fib extension, which is 115.78, and then there's the 161, which is 122.33. Again, this is multiple days up, getting a little bit steep. It's I don't like when we're coming up from the bottom this sharply, and getting through old highs. I think these start becoming more of a sale than a buy for the breakout just when they get this sharp. I like to see, this kind of like sideways chopping action, and then, it finally makes the run. But here you could see we had a bit of a breakdown, and now we're coming back up. I would be looking to start taking some profits in Gilead actually on rallies. I think if we can get up, if you take a look on a bit of a longer term chart, anytime we've come up to this, I went back a little bit too far. But in recent times, anytime we've come up to this this kind of uptrend channel, it's been kind of a problem for the stock. So I would say this time probably shouldn't be any different. And if there is some type of a move, you can see up to here, it coincides well with that 101.272 fib extension. And I'd be looking to take some profits if we do get up into the 115s. Anywhere into the 115 or close to 116, this area, I would be looking to book some gains. Google is another big, name stock. The NASDAQ has had some great relative strength, as I've shown, and Google hasn't really been participating. I had been trying to play this stock long. I got stopped out a couple of times, and it's sort of really didn't work out. As a long setup, you could see we kind of did come back up here to make, like I was playing in here with short puts. We came down, we were making some higher lows, then equal lows. We kind of snapped this, then made a higher high, and then kind of it just fell apart. We had a bit of a mini breakdown here below this level, this 577. I don't like how I have it labeled on the chart. Let me adjust that. And then a more major breakdown as we came down through here. So I would think that there's probably a little bit of work to be done in Google. I had been discussing it as some type of a long down here at 511. We stopped just ahead of there. These stocks never really make it, or I shouldn't say never, but rarely make it that easy when you get in, right at the, they stop right to the dime. But we didn't, and we had a bit of a bounce. It was a little bit relatively weak on Friday. And we have some 20 AMA resistance over it, and then these breakdowns, which I think could actually be points for day trade shorts at 267.45, and then 577 as I had shown, and they would be great if this kind of came up here and it coincided with the downtrend line, so it'd be a right or right out type of a trade. If it breaks the downtrend line, then I think it's a go with, and maybe you play for a little bit more of a rally up into range here. That I will be discussing if and when it does set up for that way. If Google does wind up rolling up down over here, let's see if these lows hold. If Google can start making some higher lows and higher highs, then it might set up to be a bit of a long again. For me, right here, it's a little bit of a no touch, just until there are some stronger stocks to play for longs. But this may wind up setting up again, as I said, as a short, or maybe for a long if we get back down to this more dominant trend line. If it coincided with this again, I'd like to see how price handles itself with Google there. IBM was a complete disaster, not one I really trade very often. It had been in a bit of a downtrend line, and it had some reference lows here, and it took out those lows on a gap. It tried to rally, and then just the next day just completely fell apart, and it's been kind of like in this bear flag, this descending bear flag. So my thinking, if you go back on a bit of a longer term chart with IBM, this could set up for I don't really see much support actually. I don't really see much of a trade setting up here, other than the stock may have lower to go. I mean, you could see we broke these triple bottoms here with a gap. It couldn't even get back up to retest. We're going lower. I need a longer term chart. Let's go into a 5-year weekly. Yeah, that will. Let's go more. Let's do 10-year weekly. Yeah, that looks good. If you do a fib extension, well, first we have some minor supports in here at this 157 area, and then we start getting into some Fibonacci retracement lines. And if you see, the 161.8 fib extension comes in at 145, and a 50% of this entire run comes in around 142.70. So there might be some price memory there. Although for me, I would get. I mean, I know it's a lot of points away. This 61.8 fib coincides with the breakout area, and a lot of price memory in this region between 125 and 130.93. I'd be a very interested out of the money put seller there for some type of really for a longer term type of a trade. I might even be interested in buying shares down there for some type of a rally back. But short term, there's really not that much in the ways of support. I mean, this is minor support, but it's really nothing major up until when we get down into the 140s. So there's a lot of points there to go. I will say this though, this stock has in the past, it's not one I really trade very often, but it sometimes can. I've seen it where it kind of reverses out of nowhere. So I think if you can kind of take out this attempted rally reversal bar, you might see a move to try to get up to the gap or even into the gap. So I would be watching this 165.41 pretty carefully. I think anything over there might set up as a sort of a long that people wouldn't be expecting, so to speak, because you could see you kind of came down here and you had these dojis. We may break down. I mean, if you can break below this level here, this 161.10, I think you probably still set up as a short play for lower. Like I had discussed, there's really not that much ways in terms of support until this 157 minor support, and then into the 140s. But it is possible that this does something like some kind of a look below and then rally up, or just because they're like these little dojis, maybe it's like these tiny, it's kind of like forcing, like they're trying to force it down, and then it comes back up. But let's just watch this kind of failed rally reversal bar that went up to a new low. Went down to a new low. Anything over this 165.41, again, just set the alerts. I'm going to do it right now, actually. Anything above there, I think, could set up for some type of a long play that people aren't really expecting. Another one that was a bit of a disaster this week, not one I was really playing, was Netflix. And I had been asked a few times on the chart about what I thought about this, and I said it was looking a little bit more bearish just because it was making new lows, and it wasn't really much off the highs. And it seemed to me like there was some type of maybe a catch-up play. And wow, did it have catch-up. This thing was down over 100 points. It never did retest this low, which is really what I was looking for, this 299.5, somewhere between 299.5 and, like, let's just say 305, which was the old high. I'll show you on a longer-term chart with Netflix. You can see this is where it was before it really crashed. So I was kind of looking for just like, some type of a responsive trade there for some price memories. I never got it, unfortunately. Mr. Cuban, Mark Cuban, stepped in and we know bought up the stock, and he's gotten the stock, or either him or whoever has gotten the stock back into the gap. So you've now have about half back. My guess is anything over this 366, I guess you can still play long. For me, this isn't really my cup of tea. I did say that this was a long trade for just for a trade. It's worked. I'd probably be looking to take some profit somewhere around where it is right now, the half back, and maybe the 401-ish area, which is the 61.8 fib. It is possible if the tape stays bullish, we do get back up to retest these levels here in the 420s. But this stock, to me, again, there's really there's no real technical setups here. If you're first playing now, you're a little bit late to the trade. It's very hard for me to say, buy the stock here, hoping for a little bit higher, and with a 20-point stop out. This to me was a very different setup when I had said buy over here for a long than it is now. So I think this is sort of just a wait and see type of a stock, frankly. One more and then done, one and done. YHOO, I had been playing this stock short. I wound up being rather smart in covering. It wound up having a bit of a rally, lower high, lower low, stopped at the trend, and now this is really more like a professional gap. It came back up. We spent a day consolidating, and now we're back up over those highs. I would say that the high in YHOO is in play and is not secure, and this stock can probably make new highs. So I wouldn't be trying to fade Yahoo so quickly, particularly if the tape does stay bullish. This to me is a pattern that I think a lot of people didn't see coming. It wasn't very strong this day, although it did hold the low here, consolidation, and then we are over that gap high. So Yahoo to me is a buy the dip stock, particularly if we can make a new high. And with the caveat that this 41.77 has to hold as a low. But I definitely wouldn't be stepping in front of this as a short now. Anyway, let's have a good trading week. If you have any questions, please feel free to talk to me on the stream. My handle is @JustinPulitzer, and please be sure to like this video.